Okay, there's our overview. I'm going to give you an overview of the revenue situation for the state of Illinois. Notice I've used the colors of the flag of Ukraine. I think that's an important message that we send overall, so I'm very proud to do that. This is our standard announcement. Don't do your taxes on anything I have to say today, okay? This is simply the standard disclaimer. For those of you who have been with us for a while, we have some new folks in the department since last year. Rubina Hafiz is our chief economist. Rebecca Kulakowskis, who will be with us later today, the new chair of the Board of Appeals. She came from our legal staff. Melanie Neely came from the city of Chicago, and Phyllis Tate is our new Equal Opportunity Employment Officer. You can ask, okay, what are the objectives of the department? Well, looking forward, ease of filing, increase in electronic filing. Our individual income taxes, electronic filing have increased by about 4% over the past 3.5 years. Whenever possible, we mandate that by legislation. Whenever a tax issue comes up, we ask that forms be filed electronically. You'll hear more about some of this later. We've reinstated MyTax, which was an issue last year because of some fraud potential. We're going to reinstate the filing of MyTax without having a MyTax account, for those of you who are aware of MyTax. Obviously, prompt and accurate response to taxpayer inquiries, better accountability on audit. Our audit has been integrated into our GenTax, our backbone GenTax system. You'll hear more about that later. And there's going to be new audits for cannabis dispensaries. Fairly straightforward. You all know this. This is our three big tax sources. We take in $67 billion. The majority of it comes through these tax sources. Now, the next couple of slides, I do not mean to insult anyone's intelligence, but as my general counsel tells me, not everybody is a tax accountant or tax lawyer for an international corporation. So I just want to show basically what we do. The 1,300 people in the Department of Revenue, this is what we do. We collect taxes, transfers to us, and then it goes to 900 different funds in the state treasury. My job is to ensure that the staff gets it to the right place, which they have done very, very well. The flow of the individual and corporate income tax, again, comes into the Department of Revenue. Many of you may not know that off the top of that comes a percentage at both the individual and corporate level. The percentages for FY23 are right here. That goes into a refund fund so that those 65% of individual income tax filers who get a refund, there's money there for them. And, the income tax also gets shared with the local municipalities through the local government distributive fund, a significant dollar flow to municipalities, and then to the other state funds. Similarly, with the tax flow for our retailers' occupation tax and use tax, again, retailers to us, the state keeps 5% of that 6.25%. Municipalities get a portion based on the location of the retailer, and the county, except Cook, because Cook is different everywhere, get a portion of that. I want to go back for a minute because the narrative for the state of Illinois, we all know what the narrative for the state of Illinois is, right? It's a deadbeat. It can't pay its bills. People are leaving the state. I'm assuming that within the next year or two, the state's going to be totally depopulated. So let's look back for a second. We were a deadbeat 5 years ago. 5 years ago, we had no budget for 2 years. 5 years ago, we ran up $15 billion in back bills. Vendors were waiting 9 to 12 months to get paid. We ran up $900 million in interest and on those old bills. That would be like putting $900 million in the middle of the floor right here and setting fire to it, because it didn't go to pay roads, it didn't go to schools, it didn't go to do anything other than pay interest on our debt. That's what happened. And Our credit rating, 17 straight downgrades in 20 years. 17 straight downgrades in 20 years. That was the narrative for the state of Illinois. I got it. It's time to change the narrative. All right? When everybody tells you how bad Illinois is, I want you to tell them it's not the case anymore. During the past 4 years, we balanced the budget for all of those years. For FY23, we put $1 billion into the rainy day fund, otherwise known as the Budget Stabilization Fund. We paid an additional $500 million, $500 million into pensions. Pensions are an issue, no question about it, but we put $500 million into pensions above the statutorily required amount. Remember, the legislature adjourned in early April prior to the receipt of the taxes, and we forecast a $132 million surplus. It is going to be significantly more than that, as you will see shortly. And we have no back bills. No back bills. We don't call them back bills anymore. It's an accounts payable. Just like any corporation has accounts payable, we have accounts payable. We pay our bills in 2 to 3 weeks. The credit agencies took note. We're no longer, granted, we're still in what Greg Hines from from Cranes calls B land. Our basic rating is still B, but not nearly at the bottom as it was before. We now have triple B plus we have a triple B positive with a positive outlook. So we have had upgrades by all 3 credit rating agencies. So the narrative for the state of Illinois has changed. That's a bottom line because of prudent fiscal management by the governor and the legislature. Okay, we were able, because of this surplus, we were able to do what's known as the Family Relief Plan. You're going to hear more about this later, about all the rebates that we sent out, grocery tax, motor fuel tax, the income tax, and property tax rebates that you got. You'll hear more about that in a minute. How did this miracle of miracle, wonder of wonders occur? That's how it occurred right there. Those are our total collections for FY22 versus FY21. As you can see, they were up 19% from 56 billion to to $67 billion in total collections for that year. And FY21 was a good year too. We took in 19% more from FY20 to FY21. Of course, this is the pandemic year. So this is basically how it occurred. Looked at individually. Here's the individual income tax, up 4%. The individual income tax is our largest revenue source, so 4% on that big base equates to over $1 billion. But 20 to 21 was an increase of 22%, an additional 4% this year. These are numbers, by the way, which nobody really forecast. Nobody. Sales tax the same way, shows the same thing. An additional 15% in sales tax, up almost $3 billion. It was positive this year from 20 to 21, even more positive from 21 to 22. That's how we were able to get our financial house in order. I'm pushing the wrong button. I apologize. A lot of people ask about the sales tax. How much of that deals with the internet sales? It's hard for us to break it down individually because of the way we report the numbers on our ST1, our form. But as you know, we used to have a physical presence. Then with the early Amazon, the bricks and mortar issue, and then of course we had Wayfair and the economic presence. Nationally, there was a prediction that it would increase the sales tax nationally by about 7%. That's probably accurate for Illinois as well in terms of our increase in sales taxes. This is the big number. This is the really big number. The corporate income tax. We were up 100%, doubled from FY20 to FY21. We were up 129%. I mean, normally, if we get $3 billion, $2.5 to $3 billion in corporate, and these, by the way, are only the 1120s, only the 1120s. If we get $3 billion, we consider that to be a good year. We took in more than $4.5 billion in corporate income tax, and nobody predicted that in terms of economic stat. Now, was Illinois alone in that? They weren't. This is the national U.S. corporate tax receipts. As you can see, a significant jump at the national level as well for corporate tax receipts. Illinois was not alone in having a real surplus of dollars. All the states are like this. I deal with my colleagues, my other commissioners and directors and from other revenue departments throughout the United States, and they had the similar situation. Many of them lowered their tax rates. Many of them sent out rebates. Indiana the same way, Michigan the same way. They did it in different ways than we did, but all of the states, quite frankly, were flush with dollars. So what do we look at for the future? Now, if you saw the 5-year plan that was put out and required to be put out by the Governor's Office of Management and Budget, you saw that, one, it was generally positive, but there was a slowdown. Makes sense. I mean, we had Chairman Powell come out yesterday, talk about an increase in interest rates, a continuing increase in interest rates. Is that going to slow things down? I mean, he's still having the hope of a soft landing. We will see. But as we look at where we're at right now, comparing our October receipts to previous receipts, notice your sales and use increase, business income increase, individual income significant increase. That is a significant increase. Why? Well, besides interest rates and inflation, what other metric does Powell reference? He references employment. And the unemployment rate is still low. There are still lots of jobs out there for people to have. And 85% of that individual income tax, 85% is from withholding taxes. So when those workers get their paychecks every 2 weeks, every month, when those withholding taxes are withheld, that's coming into us. As long as people are working, those numbers should remain strong. If we see a slowdown in employment, the unemployment rates start to go up, you'll probably see a tail off. But right now, we are very positive in terms of what we think is going to happen for the future, or at least the immediate future. Doing okay. Now, I want to show you this year over year. It's a kind of a confusing chart, but it again emphasizes what I just showed you. This dot really doesn't belong here because it's July. This was the pandemic year when income tax receipts moved from April to July, which really threw us off. So this dot should be back down here, but all these other peaks are when estimated taxes are due, September, December. Of course, this is the main April tax receipt date. And again, look at what happened last year, a significant spike, which quite frankly caught everybody by surprise. But this is the current year, following the same pattern, but we're above last year. So we remain positive by way of what we think is going to happen with revenue for the state, at least for the foreseeable future. Throughout FY23, what happens with FY24 remains to be seen. Everybody asks about cannabis. You'll get more about cannabis from some of the staff later on. But I just wanted to show this chart. There's a lot of talk about the cannabis sales peaking. They may have, I don't know, but this, by the way, is 1 month out of date. This goes through September, we now are through October. But we bring in total, $35 to $37 million a month in cannabis receipts. That's total before all of these folks get their cut. The municipalities get theirs, the county gets theirs. The tax on cannabis is substantial, as you probably know. As a matter of fact, in the city of Chicago, if you buy $100 worth of product, you could walk out paying $135 in terms of a bill. I mean, the tax hit could be that hard because of all the taxes. But this is since the inception of cannabis, adult use cannabis back in January of 2020, a very positive chart. Has it peaked? I don't know, but certainly it's still holding its own. I want to show you some numbers when we talk about revenue. I want to show you some numbers for revenue that the department does not manage. We don't handle casinos, VGTs, or the lottery. Casinos and VGTs are handled by the gaming board. A lot of talk about casinos. For the past 5 years, and by the way, I track this because I've always tracked it, even in my prior existence as a legislator. I've always tracked casinos. the casino revenue to the state of Illinois has been down for the past 5 years. Straightforward. Now, I know everybody wants to build a casino. I say everybody. So many people want to build casinos because they view it as a pot of gold. Maybe it is, maybe it isn't. But I can tell you the revenue has gone down for the past 5 years. The only casino that really year in and year out does extremely well is Rivers out in Des Plaines, which brings in $34 to $35 million in adjusted gross revenue a month, which is $1 million a day in adjusted gross revenue for Rivers. That's pretty substantial. Now, is that going to decrease once Chicago gets its casino up and running, or the one up in Park City or Rockford or wherever? I don't know. But again, this is not an increasing source of revenue, at least right now. Look at what has happened with VGTs, the video gaming terminals. Video gaming terminals, the net to state taxes, the net to the state in 1 year from 21 to 22 was up $300 million. These things are money makers for everyone involved. It is just amazing. And it used to be limited to 5 terminals per location, and they went up to 6. Truck stops went from 5 to 10. Let me tell you, the truck stop operators love VGTs. They love them. And interestingly here, the city of Chicago, the largest municipality in the state of Illinois, does not allow VGTs. So I could only imagine what would happen if the city of Chicago went to VGTs. And municipalities make a lot of money off of VGTs as well. The lottery had a good year as well. I've always considered the lottery to be the goose that lays golden eggs. It used to bring in $650, $700 million on average a year. They had some hiccups a couple of years ago with North Star and Camelot, and that changed. But the lottery has had a good year, especially this past year. You can see that it was up $70 million. So those are sources which are non-tax sources. And I'm at the end, and I want to reference what just happened earlier this week. Some of you may be aware that the governor cut a deal on the UI Trust Fund. The state of Illinois borrowed $4.5 billion from the federal government to pay unemployment benefits when the pandemic hit and everybody started losing their jobs. That money had to be repaid by a certain date. Otherwise, employers would have some penalties put on them. We made repayments in the spring of 2.7 using some coronavirus relief funds. We made another payment in September of this year of $450 million from available UI funds because so many people were working. Unemployment debt was not as high as expected. So we made a payment. That remained $1.35 billion. The deal this week was this. The state's going to put $1.8 billion into the UI Trust Fund using state dollars. Remember, the UI Trust Fund is funded from taxes on businesses. That's going to repay our $1.3 billion in debt. But it adds $450 million to the trust fund, and it's going to be in there as an interest-free loan. And that loan is going to be repaid from business taxes over the next year. And those repayments are going to go into the Budget Stabilization Fund, the rainy day fund. Let me tell you something, credit rating agencies love it when we put money into the rainy day fund. I guarantee you they absolutely love it. That's one of the reasons we got those credit rating upgrades. I'm going to close with this, and there's a significance of the deal which isn't necessarily been noticed. Certainly it had bipartisan support, it had business and labor agreed, but it was precedent setting because state dollars have never been used previously to go into the UI Trust Fund, all right? What does that indicate? I'm going to tell you what it indicates. It indicates this governor's commitment to financial stability for this state. That's why we have credit ratings. I'm telling you, since he took office, he wanted to get us on a financially stable position. He did not want that debt hanging out there over businesses. If we had not done this, put in that $1.3 billion, there's only 2 ways to raise money for the UI Trust Fund. You raise taxes on business, or you cut the benefits to those who are unemployed by shorter time on unemployment, less benefits, that sort of thing. So this was a commitment by the governor to further his goal of fiscal and financial stability. And with that, I will wrap it up, and I'm just a few minutes over, not too bad. I'm going to take any questions now. Oh, by the way, tomorrow, 9 o'clock, we play Netherlands. Be there or be square. I'll take any quick questions now, or I'll just turn it over to the next speaker. Any comments or questions? No? Okay, thank you very much, and I will turn it over to Richard.